Evening, Ivan.
Yes, good evening, Ivan. Everything is clear on my side.
Right. So I want to welcome you to this session that is going to cover, I want us to cover 4 standards. That is IS 20, very short, IS 23, very short. I think I can also cover IFRS 5, very short but very important. And we shall also go through IFRS 2. So I am going to do so much of question practice, and I'll not be plowing back so much. I presume that you are attending to your classes, and therefore it is important we only dwell on question approach and how we can apply the standards. What I want to embrace now is the culture of you drafting your answers. You share in the group, we discuss them before I give my views. That is what is going to help you build the confidence in drafting your own answers when you interact with new case scenarios. So I'll be as brief as possible, not going so much into the technicalities of the standards, because I believe you are making use of the classes that were availed to you. What is important is always my first statement, what you must know very well, or the basics to know well. Basics to know well. So that when you are revising this standard, you know where to put your efforts. One, out of experience, I believe that you must know the 2 types of grants. And the first one is, first type of grant is please, I'm waiting for your feedback. And the first one is
Hello?
yes, please.
Yes?
Yes,
Yes,
Joseph.
Ivan.
The first type of grant is
You can hear me?
Joseph. Can you hear me?
Yes, I can now hear you.
I've said there are 2 types of grants, and the first one is okay, patience. Can you hear me?
Yes, yes.
We said
I can hear, but it's a bit unstable.
okay, maybe it's your network. How about Raymond? Can you hear me?
Yes, I can hear you.
Yes, I've said there are 2 types of grants, government grants. The first one is make sure that before you come for class, you have made your revision. That's why you have the revision planner. Yes, we can obtain grants related to assets, but we can also obtain grants related to income. I'm sure in your class for IS 20 I talked about government grants, where the government here in Uganda they are called capital grants. they are really common with schools. A government promises to construct a building for the school. That becomes government grant related to assets. And then the one for income, that's where the government pledges to give 5,000 shillings per student per term. So that now comes into form of cash to the given what? To the given school. The same grants are always given to hospitals. So those who are staying in Uganda, I think you've seen the government construct buildings for hospitals, for schools. You've also seen government provide free medical facilities in terms of income that it gives to the hospital, and then the hospital purchases the drugs or the school fees in government aided schools, where the government pays some money for the students to study for free. So the first basics to know well is the two types of government grants. And then after knowing them, you must know how are they recognized. Okay, their recognition. The recognition of the two types. And then finally, what do we mean by granted assets? By granted assets. So those are the few lines that you must know under IAS 20. And as it has been our culture, let us start with how do we recognize? Okay, how do we recognize government grants related to assets? Anyone who wants to try? Assuming that
I'm just trying.
okay, Patience, yes.
I would say if the NTC has the capacity to fulfill the conditions that have been set by the government.
Perfect. That is very important, that you must be able to fulfill the conditions that have been set by the government. But my point of interest here, under the basics, was the two types of recognition of government grants related to assets. The first one being treating the grant as deferred income, and then also deducting that grant given to the carrying amount of the asset. I know we did this in our class, but I can just reiterate it because it is important. Treated as deferred income. Okay, and when we say that we can treat this government grant given to us for construction of an asset as deferred income, we mean that we are going to take that amount that has been received in the statement of financial position as a liability. Of course, deferred income is a liability, so we should know this is a liability. And we take it to statement of financial position. And if we can remember, in our class we said we divide this liability into the non-current liability and the current liability. Of course, we follow the definitions of non-current liability, being that amount that is going to be consumed for a period beyond 1 year, and then that amount that's going to be consumed within a period of 1 year, then we treat it as a current liability. Is that okay? And what happens once you've treated this deferred income as a liability? It means that at each reporting date, you must consume part of that liability, where you take it to statement of profit or loss as an expense. I don't know if you're getting it. I mean, you are supposed to, remember it is deferred income, right? So you're supposed to realize it in the statement of profit or loss as an income for that year, so that when you spend it, it is consumed. I don't know if that is clear. So I can say as and when the grant is consumed, comma, it is, we can say the deferred income is charged, or you can say is credited to the statement of profit or loss. So that is the first what? That is the first treatment. Now what if we treat it as deducting it from the carrying amount of the asset? Okay, deduct the grant from the carrying amount of the asset. That is as simple as, if you, let me say you have a school is going to construct a building worth 150 millions, then the government gives them 50 millions. So for them, what they're going to do, if the building is going to be capitalized at 150, so they have to remove the 50 from the government, so that you take the value of the asset to be 100 million. I don't know if you're getting it. I know we got it. It's better we just now practice. Any question regarding that, or I proceed?
I even have a question.
Please do.
So, I wanted clarity on the first point where you talked about deferred income. Okay, my understanding of deferred income is income they have not yet received, but the government is going to give. I don't know if I'm getting it clear.
That is true.
So why are we putting it as a liability?
Perfect. It's you who said until when the conditions are met, that's when we can accrue that. That's when we can consume that income. Even if the money has come, okay, but you have not yet fulfilled the condition. So you take that much as a liability. You have received it, but it is a liability.
It's not yet your money.
It's not yet your money. It's not yet a government. It's not yet the company money. You've got it?
Yes. So what the other thing I'm not getting is that part where you're saying, as and when the grant is consumed, the deferred income is credited to the statement of profit and loss. Please, can you elaborate on that?
Okay, let me give you an example. They have constructed a building, okay? It is there. But now, as per the school policy, they depreciate that building at 20%. Do you get it? So the standard says if you depreciate your building at 20%, then you should also depreciate this liability at 20%.
Okay.
You get it, eh? So here I mean the deferred income should be charged to the statement of profit or loss. Let me use the word credited because charged is for expense. Should be credited. Should be credited to the statement of profit or loss. Okay. Should be credited to the statement of profit or loss over the useful life of the asset that the government provided the grant for. Okay, using the same depreciation method subjected to the asset. Does not that make sense?
Ivan, I found depreciation has a debit balance.
Okay, you see, we are trying. Oh my God, we are not depreciating the liability, the income, but I've told you. Let me give you an example. If the amount was 50 million, okay, and you are depreciating the asset at 20%, okay, then you should take 20% of the 50 millions to the profit or loss as the income for the year.
Okay.
You get it now? So it is not depreciation. We are trying to, I will not even call it amortizing. We are trying to consume the income in the statement of financial position to pass it to the statement of profit or loss as an income following the rate of depreciation of the what? Of the asset. Okay, so that is the basic detail that you need to know about government grants related to assets. Is there any question I need to clarify or I proceed? All right, I'll presume that we are all fine. When it comes to government grants related to income, these ones are just basic. Okay, what we need is, remember this one is, it comes in form of cash. Okay, please take note. It comes in form of cash. Therefore, before you recognize this as income, you must be sure that one, the conditions for which the grant was provided, okay, shall be fulfilled. And then two, the entity should be sure that you are going to receive that grant. Okay, we are saying to be recognized by any entity, two conditions must be fulfilled. One, it is beyond reasonable doubt that the entity shall fulfill the conditions thereof attached to the grant. Okay, so here I'll use this, and I'll also use that. And then secondly, the entity is sure to be in position, okay, I can say the entity has confirmed receipt of the receipt of the grant. How can I adjust this? The entity has confirmed receipt. Okay, has confirmed the possibility of receiving the grant. As basic as that. 1, will you fulfill the conditions attached to the grant you are going to receive? And then 2, are you sure beyond reasonable doubt that you're going to receive that amount from the government? If this is okay, then you can go ahead and recognize an income, okay, and recognize an income in your financial statements. And the issue is, the treatment is, assuming that you received 50 millions and you're going to be paying 100,000, okay, you're going to be paying 100,000 per month for the students. You get 100,000 times 12 months, okay, to get 1.2 million. And then what you do, you start recognizing that income basing on the expenses that you meet in relation to the conditions. Is that clear? The income is recognized systematically, okay, over the period during which the expense the grant was to meet is incurred. Is that okay with everyone? Yes, is this fine? I proceed? Guys, please tell me.
Yes, it is.
It is. All right. So we can proceed now. Recognition of the 2 types. I think this one we've already covered, because the first one was the 2 types of grants. The government grants related to assets, first one. Second one to income. Then I've showed you how to recognize these grants, using 1, deferred income, then using 2, carrying amount of the asset, you remove the grant amount. And then for those that are for income, there are 2 conditions that should be fulfilled. 1 being having reasonable assurance that you receive the money. No, I mean having reasonable assurance that you receive the money from the government. And then 2, having reasonable assurance that you'll be able to fulfill the conditions that have been set by the government. Now, something about granted assets, okay? The government can give vehicles, okay? Or you can have, let me say now, this guy, who's this guy who produced Covidex? The guy is given license to produce what? To produce Covidex. That is a free asset, because a license is an intangible asset. So at that point, if you have such, okay, if you have such an asset that is granted to you by the government, you are supposed to record them as per the applicable accounting standard. Now in this case, the issue is, this is an intangible asset, a license. We know that IAS 38 tells us if it is an internally generated intangible asset, we shouldn't recognize it in the financial statements. So IAS 20 says if you've been given free intangible asset in form of license to operate, let me say, a television set, to operate a television station, or to produce Covidex, then you can use the fair value of that license. That is, if you can obtain the value of the same license on the market, you can use that. Or you can use what we call the cost value. And of course, since you did not incur any amount, it has been given to you free by the government, you charge it at 0 Ugandan shillings. Is that fine with everyone? So we are saying for such assets freely given to the entity, such as license to produce Covidex or license to run a television station, I can say, then this must be measured at either the fair value of the asset or at cost, which is of course 0, since you've not bought it. But remember, if you were to follow the guidance of IAS 36, you wouldn't recognize this asset because it is internally generated. That's why this standard says if you've received it free from the government, then you are at liberty to recognize it in your financial statements. Is that clear?
Yes.
Okay, if you're saying it is yes, what could be the double entry for that transaction? Assuming that Joseph, you are, who's that owner of Covidex? They have given you a license. Which entry would you pass in your financials? Raymond?
Yes, since we are okay for this case, I feel like we debit the license.
Mhm. Why do you credit?
Whether you call it government grant.
Perfect. You're brilliant. Government grant. Because you didn't, did you pay any money out? No. You debit your government grant. So that could be the double entry. Now that said, okay, that said, we have come to the end of the basics about IAS 20, and so I can proceed to IAS 23. Any question? Let me tell you, this standard will not come as a full-fledged standard. It will be embedded within the scenario, and therefore it should be upon you to know these basics and then apply them in the question. You don't expect to find a very big question on IAS 20. No. They will just talk about an intangible asset that an entity obtained out of a government grant. So if you missed out granted assets, then you can't get the free what? the free marks. Maximum can be 5 or 4 marks awarded to that section. Okay, so now let us go to IAS 23, which is borrowing costs. Patience, Raymond, and Joseph. Are you, I think even Florence is on board. Did you all register for the paper?
Yes.
Yes.
Yes, sir.
Okay. Florence, did you?
Yes.
Now, I'm sure this is the team that is going to sit in March, so we should now put in the efforts, I presume. So, our target is all of us to pass the paper. And I need very good marks from you. Of course, they will not come on a silver plate. You must put in the efforts, you as the students. Okay, anything that you know about IAS 23 borrowing costs? Anyone who can share before I share my basics? Yes, please.
Yes, Ivan. You can hear me now?
Yes, we can.
Yes. Me what I know about borrowing costs. The way the name goes, borrowing costs, we basically look into the capitalization of the interest. The interest onto the borrowed funds to finance qualifying assets. So the interest on the borrowed funds would be capitalized onto the cost of the asset until the point when the setup or when the asset is available for use, when the construction is done. That's the point onto which we capitalize that interest expense. So now upon finishing construction of the asset, that other cost should be expensed.
That is a very good summary of the standard, and I think I do not have to repeat it other than giving you a question. Patience, are you comfortable with it?
Yes, I am.
Raymond, are you okay with that? Because he has given a brief of the standard, and nothing much I need to give you guys.
Yes, it is okay.
And Florence, are you okay?
Yes.
All right, but before, since you are all okay, let me give you the basics to know. 1, and since it is okay with everyone, you give me the definitions. 1, we have to know the accounting treatment, and that is what Joseph has given. You only capitalize borrowing costs, which is finance cost, which is the interest, only during the period when that asset is under utilization. So you must know the accounting treatment. You must know the definition of a qualifying asset, because this is important when we are answering the questions. Okay, you must always define what a qualifying asset is. Then you must know some examples of the borrowing costs. Then we have to know the measurement of borrowing costs. Okay, measurement of borrowing costs, which is the same as capitalization. All right, since we are all aware, who can define for us what a qualifying asset is? Hello?
Pardon, you said qualifying asset?
Yes, what is it?
A qualifying asset is an asset that takes a substantial period of time to be complete for use or for sale.
Perfect. Any asset that takes a substantial period of time to be ready for use. Okay, let me ask Joseph. Assuming that we borrowed funds from Centenary Bank, 100 million, but the project was not ready to start. We invested that money in another bank and it got us some interest. Okay? When the construction starts, how much should we capitalize?
To answer Ivan, we would net off the interest earned. The interest earned onto the investment is netted off the expense prior to capitalization.
That is perfect. That is perfect. We are saying in case of any income earned as a result of investing the borrowed funds, then the difference between the borrowing cost bracket interest charged and the income and is capitalized. So that is really important. Let me ask Florence, what are the conditions of capitalization? Conditions of capitalization. Joseph gave them. What are the conditions?
The non-qualifying asset is capitalized if the asset is under utilization.
Okay. Anything? So as you've said, we only capitalize one if the expenditure is incurred. That is why Joseph said, in case there is any suspension and workers are not constructing, then you cannot capitalize the interest during that period. So we only capitalize borrowing costs if the expenditure is being what? Is being incurred. So in case of strikes and work is halted, we cannot capitalize those borrowing costs. Then also, borrowing costs must be incurred. Borrowing costs are being what? Are being incurred. Assuming that you obtain the loan, then you get a grace period. You cannot calculate that period where you're not supposed to pay interest to the bank. You can't calculate and then you say, I'm going to capitalize this amount. No, you only capitalize borrowing costs when they are actually being incurred by the entity. Then lastly, Joseph said, we capitalize borrowing costs if the asset, okay, or activity, we can say, okay, if the process or activity to prepare the asset, okay, to prepare the asset for use or sale has commenced. As he said, if you are going to construct a building, if you obtain a loan on 1st January 2024 and construction starts on 31st January 2024, that period, the interest incurred during that period cannot be capitalized. We should therefore expense it to the profit or loss. So these are the basics that you should know about IAS 23. It's small. We can now just have an example, and you guys are going to attempt it. Since it is a basic standard, then I presume you can read the scenario and then put the answer in the chat box for review before we draft our answer. Okay, I'm looking for the question. Give me a second. So that is the question. Can you please try out and put the answer in the chat box? And don't just put for me plain answers. Construct a full answer using state, apply, state, apply, conclude. That's what you should follow while drafting your answer. I'm giving you 10 minutes. So 10 minutes for you to read, and then you draft the answer. Yes. How far with the attempt?
Yes, hello.
Yes, Joseph.
Yes, I'm done with the computation. The rest of the discussion points are not, I don't know if I can explain verbally, but I'll post with my final interest to capitalize in the chat box.
You see, we can easily enjoy the words, but you type.
You can use it what?
We can enjoy the words, but you type your answer.
Okay.
Okay, I think that is more than enough time than what you get in the exam. I have not received anything from Patience and anything from Florence. Patience, have you tried out?
Yes, I have, but I was trying to conclude.
Okay, you conclude. Florence, have you tried out?
Yes, I have. I'm going to spend.
Yes, but this can take around only around 5 marks or 4 marks. And if you get 4 times 1.8, you need only 7 minutes. So Raymond, this is your full answer.
It's actually not my full answer, but the chat has a limit that you can type, so I'm still typing now.
Are you on a computer? Are you on a laptop? Oh.
I'm not using the laptop, that's just giving me a hard time.
Okay.
Yes, Ivan.
Yes, please.
By any chance, have you received that cake cell? Because I saw when I pasted here, things sort of distorted.
Of course, can you just give me the wordings? But the truth is, in SBR, there are no marks for calculations. Even if someone writes a wrong value, but when the application from the standard is correct, they can get full marks.
Okay.
And even for that question, you will not use Excel. I'll
Hmm.
show you how you're going to approach it. You can't use Excel, it's not needed.
Okay.
SBR is more of application standards and less of number crunching.
Thank you.
So with this full calculation, you just take your time for nothing.
Hmm.
So in fact, apart from the question one,
Hmm.
you will not use Excel anywhere. Okay?
Okay, yes, sir.
For SBR, apart from question 1, we are not using Excel anywhere.
Tickets here. And I've got them individual, I think.
Okay, let me type for you. Let me paste here what you put in Excel. But be it known, you will not use Excel in other questions. And in fact, even for question 1 here, it is only that part for the pre-populated spreadsheet. For other things, you will not use them. All of these wordings you put in Excel, you must write them in Word.
Okay, that means I can even do my computation manually on the calculator. I see my answer, then I type it, I type. I don't even put any working anywhere. Just type and organize them.
Do you see
What?
this? Do you see this comment? That's what you should do.
Okay.
I'm going to show you. But are you watching the classes or you're not watching classes?
Oh, I wasn't watching them.
That's where I teach the question approach. And that's why you see Raymond. He has drafted something like this. Are you seeing calculations?
No.
So I'll show you what I want you to read. Okay, so I think we've had more than enough time for that question. Florence Mero, he has put that. Come on, Florence. Okay, let us go through it. I'm sure you have your answer somewhere. Let us try to digest the question. Because I was trying to see if anyone got the concept right. With Joseph, of course, the calculation, you took time, but as we said, no marks are given for calculations. Very, very minimal. Okay, so let us go to the question. Discuss what amount of borrowing costs incurred in the year ended 31st May 2x1 should be recognized as an asset. Yes, the question was kinda challenging, but it's very important that we remember the basics. I've not seen anyone defining qualifying asset. Did anyone define it?
Yes, I did.
Yeah, I think, yeah.
Yes, I did.
Raymond did. This is good.
Yes, I did.
This is good. But now, Raymond, you watch your language, eh?
Yes.
Is that correct?
No.
Then, is this correct? I'm sure you meant the capitalization. Not so?
It's a recapitalization, yes.
So you
You know,
should.
I was trying to rush.
Yeah, of course, in the exam, it will even be worse, yeah?
And the fact that I'm not using a PC, it makes it so hard. Like a keyboard is so small.
Perfect, no issues. No issues. Let us attempt the question, eh? So they are saying, during the year ended 31st May 2x1, Chandraco extended its manufacturing plant. The company applied for a construction permit on 1st July 2x0, and on this date began the process to tender the construction work out by engaging external search consultants. Construction began on 1st September 2x0. I'm sure we all said we should start capitalization from this date. Did anyone use another date? Yes? Okay. But remember, this was a technical question, yeah? To put you off, of course. The company applied for a construction permit on 1st July 2x0. Okay? It means that without the permit, these guys cannot. Can they construct the building? Hello? Can they construct
No,
the
they
building?
cannot.
They cannot. And when was the loan obtained? And you see here they told you, they said the funds were drawn on 1st July. Very important. 1.5 million was used immediately to finance the initial stages of the project. Very important. So, it means that your capitalization should start from 1st July. Are we getting it? Your capitalization should start on 1st July. I want to check for, okay, I see someone said $925, therefore, Mukama Joseph, okay, Patience has also shared hers. Okay, I was trying to look for what Raymond said would be the capitalized amount. Okay. So guys, I was showing you they cannot construct the building without the permit. And so these guys got a loan on the day they applied for the permit. They even used that money to pay for the permit. As such, capitalization must start from 1st July. You see, I have not put down any answer. I have not put down my state, my apply, no. I'm just trying to analyze the scenario. Okay. The terms of the contract with the construction company require regular progress payments based on the work completed. Despite a 1-month unscheduled break in the construction in December, so here they are trying to tell you, okay, that there is some red mark. That 1 month should not be part of the capitalized cost. The extension was ready for use. Very important. I think I saw Joseph put down the dates. This is very important. Okay. When they applied for the permit, this was there to confuse you. This was there to confuse you. Red mark. Yes, it is important to know when the work began, but substantially this work began with application of the permit. Otherwise, and to make it clear, they used some money of the loan to clear the permits, the costs related to permit. So that was important. Okay. Due to unexpected, okay, the extension was ready for use. This is very important because at that point, you should stop capitalization. And you see, whenever you see all these points, you must remember the concept from the standard so that you can put them under your state. And Chandrako began to use the facilities. This was red flag. It is not important. This one, not important. Okay, so what can I do? Let me change this. Let me change this to another point, the green that we need to pick. Of course, even this should also be in green. Even this should be in green. Okay. The expansion was funded through a specific loan for this. So this is the loan amount. Very important. With an annual interest rate of 5%. Very important. With the balance invested, this statement invested, very important. And you see, whatever you see in the case scenario must appear in your state, because you're going to use what you have stated to apply. With the balance invested in a deposit account attracting 2% interest per annum, the remaining, you see, the remaining 3.7, you see the 3.7 here is the 5.2 minus 1.5, meaning that they invested from 1st July up to 31st August. Did anyone pick this information? Joseph, did you see that?
Oh yes, I saw it.
They invested from 1st July to 31st August. How many months are those, Joseph?
2 months.
2 months. Okay. To make a progress payment to the construction. The loan was repaid. This is not important. This is just noise in the standard. This is just noise in the in the case scenario. Not important. So after summarizing those points, okay, now we are going to answer the question. Joseph, you're going to see how brief we are going to be and how we are going to attempt. We said we use the state, we use apply, and the conclude technique. So under state, we know that we can only capitalize. You see, they're telling us what amount of borrowing costs incurred should be recognized as an asset. That is capitalization. Meaning that you should talk about what a qualifying asset is. Okay, so I'm going to say that. We can say as per IAS 23, okay, only borrowing costs of what? Of a qualifying asset should be capitalized. Okay, should be capitalized as part of the asset. Okay, and any other costs, okay, incurred, you can even say borrowing, and any other borrowing costs and any other borrowing costs incurred, okay, expensed. Take note of my words. Expensed, or you can say charged. Expensed, charged to profit or loss. But this is advanced, or it is strategic business reporting. Even the choice of words that you use matter in your answer. Okay, so that is from the standard. Are we getting it? That is from the standard. Then we say, in accordance with IAS 23. Now we are going to define what a qualifying asset is. Because we know we need the definition of a qualifying asset for us to assess and see if the expansion qualifies to be a qualifying asset. So in accordance with IAS 23, a qualifying asset is an asset that takes a substantial period of what? Period of time to be ready for use, or to be ready for the intended use, or even if you say to be ready for use, full stop. But the question is, when you look at this question, what else have they talked about in the standard? One, we must fulfill the conditions, because they've talked about unscheduled break. Okay, they have talked about borrowing costs being incurred. Where is it? From 1st to 28th. Where is 28th? To here. And then when was the loan repaid? This. So you must talk about the conditions for borrowing costs. In fact, this is one of the standards where you can write all the information. I told you, you write, understate, you write as per the information provided in the what? In the scenario, because we are going to use this information understate to apply. Okay. Furthermore, you see, I have used my as per, I have used in accordance. Now I want to continue. Furthermore, IAS 23 requires borrowing costs. Okay, requires borrowing costs to be capitalized if, then you say, 1, the expenditure on the asset is being incurred. Why am I putting this statement? Because there's a time when nothing was going on. Okay, borrowing costs are being incurred. And then number 3, activities to prepare the asset for use are underway. Of course, you have to be able to recall all these points when it comes to IAS 23. We've talked about when a borrowing costs capitalized, qualifying asset. What is a qualifying asset? We have stated it. Okay, then it comes to the conditions, because we're going to use those conditions to apply in our answer. Okay, so now we can proceed and say, now I'm going to my, okay, I need something. What have I left out? We've talked about this. Where is it? This one here. That in case there is what? In case there is any investment of the amount borrowed, then you should get the net. Okay, then you should get the net. Let us also talk about that under our state, because that is still in the state part from the standard, the knowledge that we know in the what? In the standard. Then you can say IAS 23 requires that if any borrowed amount, if any borrowed amount is invested, then is invested, we can say before or during the construction of the asset, then the net of the borrowing costs incurred and income, we can say interest, and on the investment is capitalized. Is there anything that I've left out? Okay, now we can go and apply. Joseph, I see that I've not put any calculation. Have I put any calculation?
Nothing.
Now we go to apply. Under apply, I'm going to use what I have stated. When I have to show what makes the asset a qualifying asset. Okay, so these guys, see, we are saying 1st July, okay, to 28th February. Remember, IAS 23 does not give us any the amount of substantial period. I don't know if you're getting it. So we are going to say that I'll pick this, okay, and yes, I'll pick this. I take it to my application. So I'm going to say that. Now instead of saying the company, I'm going to use, we said under apply, you must use the name of the company. So the name of the company is Chandraco. So I'll copy this also. I take to Chandraco. Okay, where is it? If you don't use the company, we must use the name of the company. So we say Chandraco applied for a construction permit on 1st July 2x note, and on the same date, you see I'm adjusting, and on the same date, comma, it began on the process of tendering the construction work out by engaging external search consultants. Okay, then we're going to pick the time when it stopped. We're going to pick this and then say, where is it? The extension was ready. You see, I'm picking information that can make me conclude that surely, okay, that surely the extension was a qualifying asset. So I say, on the same date, it began on the process of tendering the construction work out by engaging external search consultants, and the extension was ready for use on 2/8 full stop. As such, make use of that word, as such, the extension is a qualifying asset. Of course, these are my words, so I will not leave them in green. Okay. Is a qualifying asset. Now, which other information is remaining? Okay, which other information is remaining from this point in accordance qualifying? Now I have to apply this. Okay, so I'll pick this and say I'll pick something from the scenario. Okay, I'm going to pick this. I'm going to pick this because this is very important. This is very important. I'm going to pick that, take it to my apply, and then play around with it. So I'm going to say, okay, for one month, comma, there was an unscheduled break in the construction, okay, of the extension in December 2x0 due to unexpected incremental weather. As such, this period, okay, as such, any borrowing costs incurred during this period should not be capitalized. Therefore, only interest incurred for how many months are those? For 7 months. You put in brackets, how are you getting 7 months? We started on first what? First, where is it? 1st July 2x0 to, okay, 28th February 2x1 less 1 month of December. Are there 7 months? We have July, August, September, October, November, December. Okay, December, January, February. Those are 8 months, but December is off to give you 7 months. And since we need always short answers, we can put this one down here. Therefore, only interest incurred for 7 months should be capitalized. Then we go up here. We are applying. We've talked about that, this. Now we want to talk about this statement under our application. So that statement under our application, we are going to pick a statement in the case scenario. Where is that statement? It is here. The funds were drawn on this. Perfect. This one is okay. With the balance invested, now this one here. With the balance invested, control copy, then we come and put it down here. We are still under application. Then we say that, okay, Chandrako invested, how much is it? He invested $3.7 million. But how are you getting it? $5.2 million minus $1.5 million. That's how we are going to be drafting our answers. So Chandrako invested this. How am I getting it? Okay. On a, okay, they used to a deposit account attracting 2% interest per annum. But first we can say per annum for 2 months. Put in brackets. This shows that you read the scenario. Put in brackets. This guy invested on first what? Was it 1st July 2x not 2. We go back to the case scenario. When did he stop? To this month here. This was the hint to that month. Okay, so you come and put it here. So we are saying Chandrako invested this to a deposit account attracting this per annum for 2 months bracket that to that. Okay, then we say that. Now we come to our conclusion. We have applied, and you see that each statement I've put under application has a basis under state. I wish Michael was here, was asking how many points should we write. You see, once you have a very good state, now whatever you apply, you pick from the state. Then under conclusion, we are going to write about how much should be capitalized. Okay. Chandrako should capitalize $. Now we are going to calculate. We've said we must get how much. We must get how much this guy incurred. Then we less. Then we do what? Okay, we can first put it here under apply to make it easier. So I'm going to say as, okay, I don't need this, I need, okay. Therefore, but now this one, therefore, is more of conclusion. Let me say, Chandrako incurred $. I'm going to put in brackets. Okay, I'm going to put in brackets. This I need to copy. I put here. Chandrako incurred $. We have 7 months. We talked about them here. Okay. Then, so we have 7 months times the amount that was borrowed, 5.2 million. Okay. Times the rate. Not so? 5 what? 5%. But remember, this rate is per annum. So divide by 12. Or for you can say 7 out of 12. It is also fine. But now this one you have to do this. So how much is that on your calculator? I have mine. 7 out of 12 times 5 exponent 6 times 5 divided by, or it should be 5.2. 5.2 exponent 6 times 7 divided by 12 times 5 divided by 100. Is it 15? Yes. Chandrako incurred 151, okay, 667, okay, dollars. in brackets. That's how I got it. And dollar bracket, how are you getting it? It is 2 months divided by 12, since it is per annum, like that, times how much did he invest? We already calculated it here, 3.7 million. Then times what is missing? The rate. Rate is 2% from the question. The rate is 2% here. So you come and put here 2%. The rate is 2%. 2%. Then you get your calculation and put it here. 2 by 12 times 3.7 exponent 6. Okay, 2 by 12 times 3.7 exponent 6 times 2 divided by 100. It is 12, dollar 12 333. So and dollar that from the deposit in the bank. Okay, from the deposit in the deposit account. Then you say, now we are going to conclude using what we started above. Therefore, Chandrako should capitalize bracket. How much did they incur? Dollar 151,667 minus dollar 12333 to give you what? To give you, this is 151,667 minus 12123. Should capitalize 139,334. Therefore, okay. Therefore, then that's conclusion statement. Therefore, Chandrako should capitalize that amount. Should capitalize this as an asset in the financial statements. But as I told you, in your exam, you won't have this. This is going to be in your head. You won't have that. It should be in your head. You won't have this. So your answer is going to be like that. As simple as that. But this shows that you are organized in terms of flowing. The examiner can know that here you are stating, here you are applying, and you also concluded. Any question? Just for your practice. Any question?
No, sir, from me.
But have you learned something, Joseph?
Yes, I have, especially those computation things.
Yes.
How to refresh them in the wording.
Apart from your pre-populated spreadsheet, these are the ones we do like this for all questions. And trust me, even if you get wrong figure, okay, but your explanations are correct, is what we call own figure rule. You'll get the marks.
Noted, sir.
Patience?
Yes, I've got it.
Florence, are you fine?
Yes, I'm fine.
How about Raymond?
Yes, I'm okay.
Yeah. By the way, for me, I believe it is more beneficial to take more time in answer drafting than me repeating the concepts. What would you prefer?
On my side, I think answer drafting is better. Like what you're doing is better than the theoretical dating of information.
All right. So what we are going to do, we are stopping here tonight. We have IFRS 5 pending, but for me, I will not look at covering so many standards when you are not picking how we should draft the what? The answer. So on Wednesday, we shall meet, no, on Thursday, we shall meet and we shall do another standard, also see how we attempt the question. I'm sure we have enough time. I'm very sure we have enough time to go through the standards and also practice. What we are going to do, you have a mock on Sunday. You have access to all the classes. If you don't, please let me know. So what you do in your free time, like tomorrow, anytime in the night, go through the standards and cover the content. So that when we meet here and I show you how to answer the questions, at least you know where I pick the information from. Are you getting me? I expected you to ask me. You used to say that we shouldn't define all the time. We had to define in this standard because this definition was important for us to determine in the application if the asset is a qualifying asset. So that is the level of intellect you're supposed to apply in choosing which information you should write under state and which information you shouldn't write. I presume we have all benefited. Allow me wish you a good night unless there is any question. Yes, Patience.
I even have a request. There is a mock we did whereby we did a number on Ias 23. I was requesting if you could at least give us an approach on you, because both of us who attempted that question, we didn't get the conclusion right, I think. So I was requesting if you could give us an answer on that mock question.
Which one?
The one we did, I think, the Sunday before we started the classes.
I can't get you. I think you're sick. I can't get you very well.
There's a mock. We did, I think it's me and Raymond who attempted. And it had a question on Ias 23. But you didn't give us the final answer on that, because both of us didn't get the conclusion right.
Okay. Meaning that we only did the revision for the IS 16 question.
Yes.
Okay, remind me so that in our next class we start with that question, eh?
Okay.
And let me share the same mock in the group so that those who missed can also read through.
Okay.
All right. Kale, have a good evening.
Good evening.